Good afternoon, and thank you for joining today's webinar from Yellowstone Advisory. Today's company presenting is Anexo, who reported their full year results on the 27th of April.
Hello, good afternoon, everybody. I'm Alan Sellers. I'm the Executive Chairman of Anexo.
And good morning, it's Mark Bringloe here, CFO.
If I can take you all, please, to page 3 of the presentation, which is the introduction and essentially sets out what Anexo does. And basically, we're a fully integrated credit hire legal services group, which acts for the victims of non-fault motorists. And where we're very different to other people in the market like Red A, we specialize in looking after the impecunious client. And what does that mean? It basically means that the client has no money or little or no access to cash or credit. And typically our clients, when they insure their vehicle, don't insure it fully comp, they insure it third party. So what happens is they have a non-fault accident, they can't go to their insurance company because they're insured third party. So typically they go to their local garage, which I call Fred in the Shed type garages, essentially one-man band independence, and ask for help. And hopefully, if it's one of our garages, they say to the client, we've got a solution, contact Anexo, they'll sort out all your problems. And the attraction for the garage is that we fund the repair cost at commercial rates within 14 days, or if the vehicle is a write-off, we pay the recovery and storage charges of the garage, again, within 14 to 28 days. So from a garage perspective, it's all about client retention. The client's vehicle doesn't, for example, get taken off to an insurance company, supply chain repairer, etc. And you'll see from the slide that once the repair is completed, we pass our repair and hire charges to Bond Turner, who recover our hire and repair charges from the at-fault insurer, plus any other losses that the client may have. And you'll see there that our turnover for the year end 20 was 86.8 million, with adjusted PBT of 16.1, with operating margins of 21.6, and we have agreed to pay a final dividend of 1 penny. On the next page of the presentation, we've set out the business overview, but it's probably worth just setting out how the business started and evolved. And in the early 90s, I was a barrister practicing essentially in the northwest of England, acting for non-fault motorists. And what I was finding in court was I was acting for clients who'd had a non-fault accident. The insurers or the insurance industry was not looking after their needs post-accident. And typically people would have their accident, couldn't get their vehicle repaired, and or couldn't get a check for their replacement, but nobody was providing them with a hire vehicle. So I saw an opportunity in the market, and we started in 1996 with 6 small cars, and perhaps much to my surprise, the demand was there, and the business has evolved since then, providing a complete solution for the non-fault motorist, particularly the impecunious motorist. And there's 3 parts to the business essentially. There's DAMS, which provides cars and vans, McCAMS, which provides motorcycles, and CAMS, which is the provision of bicycles. We've got national coverage via our sales network, and we have circa 1150 local body shops and repairers who look after are impecunious motorists. Our legal services division is a firm of solicitors called Bond Turner, who act for all our clients. And basically Bond Turner, other than specialist departments such as VW and housing disrepair, which I'll come on to later, act solely for edge clients.
So now just turning over to page 5, we've just listed there some of the financial highlights for 2020, and much of that has been extracted from the RNS that we released on Tuesday of last week. So just picking up on some of the key themes really. As Alan described, revenue for 2020 was 86.8 million, up from 78.5 million, an increase of just over 10%. Something which we're hugely proud of in these hugely challenging times, and we'll talk a little more around COVID has impacted the business a little later in the presentation. Whilst many people have been furloughing staff and making redundancies, we've taken the opportunity to continue to invest in the future and invested another 6.5 million in staff within Bond Turner and that VW case acquisition. And again, Alan will talk around the VW case a little later. In terms of numbers, headcount will come to in terms of statistics shortly, but we spent another 3.8 million on legal services, wages and salaries during 20 versus 19, as we saw the opportunity to really invest in good, high quality people that were coming into the market from a number of our competitors. Those competitors seem in the main to be withdrawing from the market, which gives us a great opportunity to continue to grow into 21 and 22 when COVID is hopefully very much in the past. From a VW perspective, in total, we've incurred costs that have all been written off as incurred of around 3.8 million in 19 and 20, around 900 of which was in 2019 and 2.9 million in 2020. So an extra 2 million of investment in that particular case, as I say, all expensed through P&L, which impacted our operating profitability, which dropped from 23 million in 19 down to just over 16 million in 2020. Pleased to propose a final dividend of £0.01 a share, taking the total up to 1.5 for the year, same as prior year. We'd always tried to work with a progressive dividend policy, but unfortunately COVID has meant that with reductions in expectation around cash collection, albeit we've seen some growth, we've held it the same as last year, but looking to have that progressive moving forwards again from next year. One of the most important factors that we very much highlighted and targeted during 19 and 20 is to ensure that the business was cash positive. A number of the pushbacks we get from the investment community is understanding the business model and how small a market share we have and how good we are in terms of settlement and percent wins. But are we going to keep coming back to the market for cash to continue to grow? And in 2020, notwithstanding COVID impact, we reported a net cash inflow of just over 200,000 in 2020 positive from an outflow in 19 of over 800,000. So a hugely positive result in what has been a hugely challenging year. Turning on to page 5, and it's a summary of some of the KPIs I'll talk around from a credit hire perspective on the following couple of slides, but just picking up there on legal staff numbers, increasing from 442 to over 500 during 2020, an increase of just over 17%. And the most important number really on there is those senior fee earners, increasing in total from 127 at the year end 19 up to 145 at the end of December 20, an increase of 14%. But more importantly, the average has really ramped up by over 26%. The average number of senior fee earners in 19 being 111 and up to 140 into 2020. And that investment really is investing in the future. With the case profile and the working capital cycle that we follow, a senior fee earner today will be loss-making, hitting profit, and won't really start to generate revenues for a number of months and won't reach settlement capacity for 9 to 12 months. So 2020 again has very much been an investment for the future, post-COVID, 2021 and into 2022. Turning over to page 7 there, we've given you quite a lot of granular detail around what we've done from a vehicle fleet perspective in the chart at the bottom. 19, as I suggest, focus was very much on maintaining the position from a credit hire perspective, and actually we kept vehicle numbers lower during that year than we started, holding back on growth, turning work away, maintaining our working capital positions and really investing in that settlement capacity within Bond Turner. So that was very much our own doing, 2019. 2020 was going to be a change of direction, continue to invest in legal services alongside growth in the fleet. But COVID obviously came along. We all went into lockdown at the end of March, started April 20, when we were about to put our foot on the accelerator. And that obviously held back growth during that lockdown period. But as you see towards the right-hand side of the chart, during the autumn period of 2020, with a number of competitors withdrawing from the market, us continued to invest both in the legal services team and sales teams within Edge. Vehicle numbers reached a peak and a record for us at over 1,900 in October 20. You can obviously see the dip there in December 20, which tends to be holiday related, and we were then working back towards lockdown. And from a peak of 1,900 in October, we ended March 2021 back down at 1,200 vehicles. You know, a real drop off again as the number of vehicles on the road declined, number of accidents obviously reduces, and our opportunities decline. But having come out of lockdown towards the end of March, early April, we're now sat today with 1,475 vehicles on the road, you know, grown by nearly 275 in 4 or 5 weeks, really demonstrating the market opportunity that we have in this business to continue to develop and grow. Turning the page there onto page 8, you can really see on the chart on the left the number of claims, how that jumped in what we funded. So using our own working capital, as Alan described, paying the garages for those repairs, really jumping towards the end of 2020 as we came out of lockdown, competition withdrawing from the market, and us picking up lots of new referrers in lots of new areas and really taking advantage of the opportunity that we saw. We talked briefly around cash collections. The chart on the right really highlights the trajectory we were following during 19. You know, more senior fee earners means more cases settled and more cash collections. And as you see, quarter on quarter during 19, that continued to rise, and that trend should have continued. Obviously, COVID hit, courts closed. Courts have been closed now for 15 months, closing at the end of March, and we're hoping that many of those will open again towards the end of June. And some special measures introduced by the government should mean we can eat into the backlog of cases that we have. With a case portfolio of over 20,000 cases at some parts, you know, car came back today, so a very new claim, and some that will settle tomorrow, and everything in between. So a great pot of activity, and if we never set another case to Bond Turner, it's got 2 years, 3 years worth of activity to settle those cases. So it's meant that during COVID, notwithstanding the position that we've seen dips in vehicle numbers, but not as bad as some businesses, dips in cash collections, but not as bad as some businesses, has been hugely resilient. Most importantly, really, that Q4 2020 again was another record. And with courts closed, and court dates really are really important for us. Until insurer gets very close to that court date, they tend not to settle a case. So with a lack of court dates, we were 60% down 2020 versus 2019 in the number of cases that actually got to court, with courts being closed and judges struggling with virtual scenarios. You know, that final quarter was a fantastic achievement. Record in December 20 of over 10 million of cash collections just for us. So that's money to be retained in our business and doesn't include what we settled for the clients. Overall, period on period, cash up 16%, 84 million up to 98 million. And that's only ever going to go one way with the investment that we've continued to make in 2020. March 21 was another record, 10.7 million of cash collections, and expectations are that as courts reopen, those court dates start occurring and improving on the position that we had in 20, that number will easily be into the hundreds of millions into 2021.
Then over the page, VW, you'll all have seen in the press that the VW case was decided in the favour of claimants on the issue of liability. And the only question now is how much and when. And there's 2 important dates coming up. In June this year, there is a preliminary hearing before the judge who'll set the trial date and give direction as to what evidence he wishes to see in preparation for the final hearing. But probably the most important date for me is September, because in September, all new claims for VW become statute barred. And I think what VW are doing as a tactical position is to wait until September passes so that they'll know the total number of claims against them and they can work out what their total liability is. We've got about 15,000 clients who are claiming against VW. We expect for the group, as in Anexo, to receive between £3,000 to £5,000 by way of success fee and legal costs. Obviously, multiply that by 15,000 and you get to a pretty large figure. But post VW, there are other multiple opportunities against other manufacturers such as BMW. Many of these manufacturers have set aside in their global accounts billions of pounds for claims of this sort. So hugely exciting for the next 3, 4, 5 years going forward.
And then just turning over to page 10 there, we've just got a bit more of an update from a COVID perspective. As I'm not sure whether you're aware, both sides of the business were what's termed essential under the government guidelines. So we've been wholly operational during the whole period. Clearly, sales teams from an Edge perspective have been working virtually with the garage network, certainly during the initial lockdown, and then moving back to face-to-face meetings. And that's where we generate our relationships and all of our opportunities. Legal services office was pretty much closed from the end of March through to the end of July. Everybody working from home, which causes us issues from an operational perspective. With the court system being wholly paper-driven rather than electronic, and Fian is typically managing 70 to 80 individual files, which can have 300, 400, 500 pieces of paper on them. It's difficult to make sure we get the same type of efficiency from case settlement. We kept the offices open in a COVID secure way so people can come, swap files, pick things up 24/7, but obviously have the underlying issues that gives from an efficiency perspective. Legal services opened the doors again towards the back end of July. We've remained open ever since, and 99% of the staff are now in the office in COVID-safe environments. You've seen the chart earlier on a monthly basis and the impact COVID has had on vehicle numbers. And clearly that's all driven by traffic, as we're all working from home rather than travelling to the office or doing our normal day-to-day business. Number of accidents obviously fall in line with that, and that's impacted our numbers. But as we've become back to towards normal, activity levels have been increasing, and with that competition withdrawing and pulling out of the market, we've seen a far greater growth in activity and opportunity than we'd originally envisaged. We've talked about the courts being open for hearings, but from a virtual perspective, and people have struggled really to make that as positive an impact as it should be. Face-to-face needs to work. Paper still moves around, and courts and the judges in particular want paper to look at. So we're hopeful from June 21, when courts are supposed to reopen per government guidelines, the things will start returning to normal, and that should have a fantastic impact on our cash collections moving forwards. As I said before, we've got a significant case backlog of 20,000 cases, some of which started today and some of which will settle tomorrow, and everything in between. Really underpins the resilience of our business model during what's been a particularly challenging year for many businesses.
And then over the page on current trading, you'll have seen we have a strong balance sheet with conservative gearing, with sufficient headroom going forward. As Mark said before, we continue recruitment, particularly in legal services at Bond Turner and for Edge. We've just opened our 5th depot for Edge in Newcastle upon Tyne. We've recently taken on another 48 garages that deal with the impecunious, and you'll have seen in the RNS that the Leeds office is now opened, is fully operational, and has 25 staff, which is growing on a weekly basis. As Mark mentioned before, in May 21, the Whiplash solicitor disappears, and for the last 25 years, our biggest competition has been the Whiplash solicitor, not really interested in what we do, but interested in the personal injury whiplash claim. but many of these solicitors provided, second-hand cars, typically 6 to 8 per firm in competition. Those firms are closing the doors because they can't recover any legal costs from the end of May. And that obviously means we've got even more opportunities to go at going forward. The other exciting opportunity for us is our housing disrepair team. We act, as you know, for the impecunious client, and we were getting lots of requests from our existing clients about whether we could help them because their rented accommodation with social housing providers was in disrepair. And we helped a few of them. And when we looked into the market, we think there are circa 400,000 claims a year, potentially against social housing providers and obviously the private market as well. And at the moment, as at today's date, we've got approximately 700 claims. We've settled 65 to 70 already. Those claims are settling at roughly £4,000 or so per case, over a period of 6 months. So a lot quicker than the core business. And, I'm hugely excited with the synergies with the impecunious going forward and the large number of opportunities in housing disrepair. The other area we're seeing growth is our bicycle division, particularly with the rise of the Deliveroo courier on a bicycle or electric bicycle. And obviously that's growing in line with the growth of people like Deliveroo. So again, another exciting opportunity to add to the core business.
Well, ladies and gentlemen, that concludes the presentation. And as Alex said at the beginning, more than happy to take questions.
Alan and Mark, thank you very much for that presentation. Certainly sounds like you are a beneficiary of the economy opening up, and you're seeing some good growth coming through. So that's really encouraging to hear. As Mark said, we are now open for questions. And just as a reminder, if you do want to ask a question, there's a chat box at the bottom of your screen. Please use that to type your question, and we'll try and get through as many questions as we can. So just starting off on some questions, here's one I think for you, Mark, on operating margins. Wondered if you could help understand why operating margins fell from 32.2% to 21.6%, and what margins are sustainable in the long term.
Well, up until COVID year, our operating margins have been in the low 30%. As I described, we've continued to invest both in the legal services team, where we invested another 3.8 million like for like between 19 and 20, and another 2 million in VW. And they're the two biggest gaps really between 19 in the early 30s and 20 in the early 20% from an operating profit position. Okay,
thank you. Another sort of numbers question here. In 2019, the average revenue per senior fee owner was 707,000, and in 2020 it fell to 619,000. Why did this number fall, and why is this measure not a KPI you track, and what would be a good figure?
I guess we don't look at it from that perspective. If they've divided by the total revenue of the group by fee earner, that's probably not quite the right way to do it. If they've looked at it from a legal services perspective, and really the fee earner only generates income within its own business, bond turner, credit hire is really the provision of vehicles on the road. The measure really will be that COVID has clearly impacted our business. Notwithstanding the position that we've increased headcount on average by 25-26%, revenues only went up by 10%. So all things being equal, and notwithstanding the fact that it takes that senior fee earner 9 to 12 months to reach settlement capacity, contribute to P&L rather than being a drain on profitability, certainly in the early months, that trend would have continued. So I'm sure it's a COVID trend.
Okay, thank you. I think you mentioned about number of cases you got in the backlog and courts opening up and how that's going to be significant for you. Here's a question sort of related to that. The gap between the number of cases that the legal team is able to process and the number of hires keeps on growing, how many lawyers do they estimate they need to hire to clear the backlog and keep pace with the number of hirers, a number of cars on hire?
I think much of the focus of the business during 19, where we actually reduced the number of vehicles on hire during that year, and 20 in the COVID year, has very much been on the future. So really investing in the legal services teams for settlements into the future. And that's, you know, something that we've challenged ourselves with doing whilst maintaining a cash positive position.
Okay. I think you mentioned some of the stats on the VW case, but just to clarify, could you confirm what the VW cases could be worth and when you might realise value and what you will do with the proceeds?
I mean, as I said before, I think tactically VW are waiting until limitation expires in September, and I'm hopeful they'll start, you know, negotiations to settle in Q4 or Q1 next year. But if that fails, the judge is setting a trial date in June this year, and I would hope that the trial date will be, you know, the middle of next year.
Okay. And I know you've got 15,000 cases. Are you still recruiting cases?
We are taking on a small number of cases, typically, you know, 200 or 300 a month. But what we've done in the last few months is, you know, preserve cash for the core business during COVID. So the figure isn't rising as much as before. But once we get guidance from the judge in June and before September, we'll, you know, ramp up before limitation expires to add to the existing 15,000 cases.
Just something extra, Alex, from your previous question. It slipped my mind at the time, the totality of the question. So during 20, we've been settling around 450 cases a month whilst recruiting heads. And we think we've now got capacity in the legal services team post-COVID and courts opening to settle somewhere between 700 and 800 cases a month. And we're not generating that number. We're generating kind of 500-600 a month. So we believe we've closed the gap. We don't need at this point to recruit anymore. We just need COVID to go away, things to come back to normal. But we will continue to recruit. We will continue to drive that number up. So our settlement capacity is continuing to grow, which means that we can continue to grow the car fleet. You know, as we've discussed, we've never been held back by opportunity. We've been held back by working capital and us wanting to grow in an organic manner, in a cash generative manner. So you know, 2021 and into 2022 is really when we can put our foot on the gas. Those cases are in that backlog, are being settled by our teams of people, and we can grow both of the businesses hand in hand.
Okay, thank you.
And I think it's, sorry to just cut across you, Alex, but I think also with the demise of the Whiplash solicitor, we're seeing more and more good people come onto the market because their firm is closing down.
Okay. Question here on growth. Is growth of 26% for 2021 reasonable, tracking the average fee earner growth in 2020, given the time lag?
Yeah, I believe so. You know, we've obviously been in discussion with our analysts to understand the principal assumptions between what they've got, and really much of the investment we've made in 20 really, you know, moves us forward into 2021. So it's COVID is something that's obviously come up quite a bit. It's really stymied growth in this particular period, but we've still got that capacity. And vehicles on the road clearly drives revenue from an edge credit hire perspective, and that's increased by nearly 15% in a month. So 1,200 to 1,475 in a month really pushes everything forwards. Fee earners generating cash settlement for bond turner, which broadly cash accounts for income. As you know, if those people settle as they should as courts open, then that'll have a hugely positive impact on both cash and revenue because of the way that we prudently account for income.
Okay. Question about the courts. How quickly will the courts, or will the reopening of the courts impact the business?
Yeah, I mean, I think it will be significant. The government has said that they're going to reopen the courts in June. There's a number of Nightingale courts proposed, and my understanding is that a lot of part-time judges are being asked by the government to sit as judges as often as possible post June, to impact on the backlog. So hopefully, the backlog of court cases will, move quite quickly.
As we've suggested, actual court hearings for us is down 60% year on year, 19 to 20. And those cases that actually get closer to court are some of the most valuable ones. They might be larger, slightly more complex. And typically when we're getting closer to court, we generate higher settlement percentages. So it's been hugely, it's had a huge impact on our results for 20, notwithstanding some of the increases we've shown in revenue, albeit a decline in profitability. So yeah, as Alan describes, those opening up, brings back some of the higher settlements that we get, the higher percentages, which will clearly have a positive impact on our averages.
I think also, Alex, that, so people are aware that a lot of insurance companies wait until they've got a court date before they settle, whereas at the moment, there's not many court dates, so they're not settling. And obviously, once the courts open fully, we get more court dates. That'll lead to accelerated settlements, not just court hearings.
Okay, thank you. We've got a couple of questions on this one, so I'm going to sort of amalgamate them. It's really about the car hire charges. And the question really is, how do your car hire charges compare to market rates for car hire? And does the legal system allow you to charge more than is the going market rate?
Yeah, so in terms of credit hire rates, if your client is impecunious, you're allowed to charge more than the spot rate. But typically what we do, or I do, is I monitor what our competitors charge from a credit hire basis, typically the high street solicitor, and we charge less, so that when the judge sees the rates we're charging, they're not shocked by it because it's less than what other people charge.
I think it's fair to say, Alex, as well, I've spent a couple of days in court when Alan was acting as a barrister for us. The arguments that you get around particular cases, certainly from my experience, we very rarely get issues in court with rate, because there isn't anybody else. As Alan described, we're cheaper than competitors. Impecunious person can't go to Hertz or Ovis with their credit cards to get the spot rates that people advertise on the television. But I think one of the things that people need to be aware, it's not like you're booking your car 6 months in advance from an airport and getting it for 20 quid a day. You need a car today. You needed it in a emergency situation. And if you walk into Hertz or Ovis today and say, can I have a car? It'll be significantly more than the rate that you could pre-book moving forward. So there is some big differences between, Sixt, I think, advertise a 5 Series BMW for £39 a day, but that'd be fine if you book it 12 months in advance. If you want one today, it's probably £300 a day. So there's a big difference really between the position that people think and the people, when you find yourself in that difficult situation, having an accident.
Yeah, okay, thank you. And just a reminder to the audience, if you do want to ask a question, please type it into the chat box at the bottom of your screen. Again, we've got a couple of questions on a similar subject, which is a shareholder register. Could you give a bit of detail on the shareholder register? There's been some major changes recently. Have the changes had any impact on your operations?
Yeah, I mean, basically, DBay joined the business, and the background to that is that DBay approached me in May last year and asked me to review another listed PLC from a legal services perspective. I did my report, never thought anything of it. And then in August last year, they contacted me and said, we're not proceeding with the other matter, but we'd like to invest in Anexo. And I think if people have looked at the DBay history, they tend to invest in what they perceive as undervalued PLCs. And obviously they've invested in us. They're in it for the long term. They, are talking long-term incentive plans for the management team. And they've got somebody on the board. And so far, it's been hugely positive.
Okay, thank you. You recruit cars from your network of independent garages. How do you recruit the bicycle claims?
It's exactly the same from independent bicycle shops.
Okay, thank you.
You see on the high street, same business model, just a bicycle.
And I'm going to add a follow-up to that. How many bicycle shops have you got in your network now?
in terms of total number of bike shops nationwide, there's about 150.
Okay. Looking at the balance sheet, how do you expect the net debt to move this year?
I think it'll be broadly flat. I think we've obviously had issues again with initial lockdown, which can be positive from a cash position. So as there's less opportunities for us to take, we're preserving our working capital, and we've certainly held back on growth in early parts of 21, Jan, Feb, March, as we were in lockdown, to preserve working capital until we understood the direction of travel of certainly courts reopening. Yeah, you know, we've got, as Alan described, significant headroom over and above what we've ordinarily would have had in our balance sheet at the minute. We're preserving that by not investing in, certainly in lots more cases from a VW perspective, very much focused on core business. So yeah, broadly flat, maybe small reduction depending on where we get to with courts reopening and cash collections improving.
Okay. And I think this is a linked question on the courts reopening. Is there a number you can give on the 2020 court pipeline revenues that you might expect?
It's really difficult. Whilst we issue court proceedings in 99.something% of our cases to make sure we've got a settlement date into the future, actual cases that actually get to court are probably only about 2% of our book. And actually, it's only a small proportion of those that actually go through the court doors. We don't want to be a business where, you know, we're trying to help somebody on the one hand, and then 18 months into the future, they've got to go to court to talk about something that happened ages ago. You know, we want to find a way to negotiate settlements with insurance companies before getting there. What we do is we track, obviously, settlement percentages and settlement numbers. Settlement numbers are certainly down if you look at it by how many fee earners we have year on year, 19 to 20. Percentage recovery is slightly down because we're missing out on that top end of cases that settle. And if you look at the number of cases that settled in 19 and we recovered 100%, it's about 6% of overall settlements. That's dropped to only 3.5% in 2020. So 2.5% of our settlements, which would ordinarily be at 100%, are down in the kind of 50s on average. So it has quite an impact on our business.
Okay. Now I've got a final question here on the dividend policy. A question, actually, another one's just come in, but anyway, we'll start with the dividend. So why is the dividend cover so high? And perhaps it would be helpful to comment on what the company dividend policy is.
I think our business, if you certainly look at the transition from profitability to cash, is low because of that, you know, 18 to 24 month working capital profile. So profit doesn't equal cash in our business. It means that we're investing for the future, continue to invest in that case backlog, as we've described, 20,000 cases all the way through. So the business produces huge amounts of cash if we reduce volumes within the credit hire business where we invest most of our value. But people don't want us to decline. They don't want to see us wholly cash generative because the future doesn't look very positive thereafter. So, you know, it's that transition from profit to cash that has meant that our dividend policy is low. And clearly with 30% margins when COVID's disappeared, it's better for us to continue to grow at a low double-digit level whilst maintaining those margins, which means that hopefully post-COVID, we're back to a progressive dividend policy moving forwards.
Okay. And we have, I think, time for this last question, so I'm going to ask it now. Is there a risk that insurers or the government do something to reduce the rates that can be charged for impecunious rates and the number of days that they can be charged?
Yeah, I mean, basically, you know, the business is underpinned by 4 Supreme Court authorities. So, you know, that's obviously important. Further, the CMA looked at this in 2014, and, you know, the CMA found that it's a valuable service that's provided to the impecunious, which adds only a few pounds to insurance policies. So I don't think there's any sort of political likelihood that that's, you know, going to come. But also, I think it would be a pretty harsh government that would say to poor people, sorry, you can't be provided with a car, etc. So, you know, I think the chances are, to say the least, remote.
Just following up on that, feels like the changes that are coming in May of this year have got the insurance companies and the government where they wanted to be. So significantly reducing the compensation for a soft tissue whiplash type injury from 2,000 to 3,000 to 200 to 300, and being able to recover legal costs to no legal costs. So it feels like all of the challenges that we've certainly been facing over the last 10 or so years have very much been focused on the perceived cost of those potentially fraudulent in the public's eyes soft tissue whiplash type injuries. And that's, as Alan described, caused the demise of the whiplash lawyer. Only about 1% of our income comes from recovery of personal injury claims associated with whiplash. We're very much focused on credit hire, and motorcycles aren't affected by the new changes.
Mark and Alan, thank you very much for that presentation, and thank you very much for answering all those questions so clearly. We've now come to the end of today's webinar with Anexo. As you leave, you'll be asked to complete a feedback survey. It'd be really helpful if you could just spend a couple of minutes doing that. I know management find it very useful. And just to flag up a couple of webinars that we've got coming next week, on the 12th and the 13th with Dialight and Myriad, both at 5 p.m. So thank you very much for attending. Mark and Alan, thank you very much for that presentation, and we would hope to see you all soon.
Thank you.
Thank you very much.
Thank you.